Hey investors, it's Dr. Marcia from Bookworm Investment Club. I'm the creator and the founder of Bookworm, and it's where we teach women how to invest in the stock market and build a profitable stock portfolio. I'm here at home looking at the icicles forming off the gutters and the chunks of snow coming down. It's actually rather pretty. But I've actually also been doing a lot of reading recently, and there's been quite a bit of articles going on talking about the upcoming stock market correction. So I thought I'd take a few minutes and talk about that. But first, as investors, we don't try to time the market, but we do want to be aware of what's happening. So let's talk about a stock market correction. And in general, a correction is a 10 to 20% drop in the stock price or a stock index like the S&P 500 from its recent high price. And it's pretty much a normal occurrence in the stock market. And corrections happen when there's been a rally or overperformance of stocks in the stock market. And we've been pretty much in rally mode since last year in March of 2020 when the market crashed. So how do we prepare for this correction, this upcoming correction, and what kind of strategies should we do to protect our mental health? Let's say it that way. And I would say the first thing is to be aware of the fact that it's coming and to make a plan. And so when it does come, you have your plan, you just execute your plan. So if your plan says, okay, if the stock market correction comes and it hits 20%, I'm just going to sell everything. Okay, then sell. If the correction comes and you say, okay, the correction comes, I'm just going to buy more shares of the companies that are in my portfolio because they'll be cheaper. Okay, then buy. If you're in the mindset of, well, if that correction comes and I'm just going to watch and see what happens, okay, then watch. The key is to do what you have to do to make yourself sleep better at night. And only you know how that's going to happen. But I must say, as long-term investors, and that's what we are at Bookworm, and that's what we teach at Bookworm, we buy and accumulate shares of quality companies, and we hold them. And we may hold on to companies for years, as long as that company is making us money. We tend to look at corrections as buying opportunities. And the other thing that we've started to look at is adding dividend growth companies to our portfolios. Well, why? Well, because dividend growth companies have consistently raised their dividends every year. And so they pay us our dividends, and they're going to pay us our dividends despite any drop in the stock price because it is company policy, and that's a good thing. So to wrap things up, when it comes to investing, it's all about planning. And right now, that plan involves investing in dividend growth stocks for our portfolio. So I am inviting you this month of February. We are doing investor chats on Wednesday evenings at 6 o'clock. Talk about investing, talk about planning to invest. And at the end of this month, we're also going to do a workshop on investing in dividend growth stocks. You will find the link below. I invite you to click, and hope to see you there. So that's it for now. Keep on investing. Bye now.